of my favorite economists here in Canada, yes, you can have a favorite economist, Benjamin Tal from CIBC recently released a report regarding gifted down payment in Canada that I wanted to quickly review with you. So fall of 2021, Benjamin Tal released this In Focus paper called Gifting for a Down Payment Perspective. There's some good nuggets in here that are worth discussing, but I'm going to keep it brief and just highlight one important thing about the amount of gift that is being received here in Toronto. So it says here the average gift in Toronto during the first 3 quarters of 2021 is now estimated at more than $130,000 for first-time buyers, while mover-uppers enjoyed a gift of almost $200,000. In his study, he also is suggesting that approximately 1/3, so 30% of first-time homebuyers received a gift. Anecdotally, I agree with that number and would suggest that in the city of Toronto, now that's a across Canada number. I think in the city of Toronto, that number is a little bit higher. And one of the things that chart or that report is confirming is that as housing prices get more expensive, we are seeing a rising percentage of gifted down payments. So based on what we expect to happen in the future with Toronto real estate, it's safe to say that we will see more and more gifting. So in anticipation of that, I want to share with you really 4 best practices when it comes to gifting, just something to think about and prepare as you discuss purchases with family members and what they might be contributing. Number 1, you want to clarify if the funds are to be a gift or a loan. And that seems so obvious, but you'd be surprised the number of times that this gets misunderstood, especially when real estate is appreciating, a property is sold, all of a sudden a family member could come back and say, hey, you know that gift we gave you, your property went up 50% over the last 5 years, we want the gift back plus. And it's a good idea to make sure that that is clear when you discuss with family members. Number 2, if the funds are being given to a couple buying together, it's really, really important to establish a cohabitation agreement or prenuptial. And I mean, every relationship is expected to last forever, but the reality is, the numbers don't lie, that not every relationship is made in heaven. And so in the case of a relationship breakdown, you want to have an established agreement beforehand. And that leads me to tip number 3, which is to establish exactly what happens if a relationship does break down. Without a prenup or an agreement in place beforehand, the equity in a matrimonial home or a home occupied by common law partners is split 50-50. That's the way the law sees it. And there is serious repercussions here because a parent will gift money to their son or daughter and are very upset when they find out that that gift is now being split between their son or daughter and their estranged partner. So good fences make good neighbors. And then lastly, the 4th tip is to put it in writing. So verbal is fine to establish it up front, but you always want to put this in writing. It doesn't have to be a very complicated document. You see things like prenup, and you think there's some negative connotation around prenup as if you're anticipating that something bad is going to happen. But the prenup could be as simple as just dealing with a gift and what happens, and get all parties to agree in writing, and then hopefully it never needs to be pulled up again. My name is Chris Mulder. I'm a Toronto mortgage broker, and I have a stated goal of improving financial literacy. So if you enjoyed this video or got some value out of it, give me a thumbs up, give me a like, and please follow me on social media. You can find me at tridacmortgages.com. If you Google that, you'll find me all over. Bye for now. Thank you so much. And if you have any questions about any topic relating to mortgages, let me know and I'll cover it in the next video.